What's up, all you people looking to purchase a home? You have come to the right spot, because in today's video, we will be going over the 5 biggest mistakes that home buyers make. And if you avoid these mistakes, you can actually save thousands of dollars. And this applies to everyone, even if you are not a first-time home buyer. Purchasing a home is filled with so many emotions. You are happy and excited because you're accomplishing something so great, but at the same time, it's so nerve-wracking because you're putting yourself in hundreds of thousands of dollars in debt. It's like going on a roller coaster blindfolded. It's something that you have never done before. What's up, everybody? Welcome to my channel. My name is Evan Phoenix. This channel is all about real estate education and my journey to financial independence through real estate investing. If that's something that you're interested in, why don't you go down and subscribe to my channel. Okay, so let's get right into it and make sure you listen to all 5 mistakes so that you can avoid them. And number 5 is arguably the most important. Now, the first mistake that home buyers make is not starting the pre-approval process early enough. Now, as simple as that is, that may be the deciding factor in you missing out on your home. As a real estate agent, I get this a lot where people want to go start seeing houses before getting pre-approved. And while I can understand doing that as a buyer, you really want to start the pre-approval process so you don't go out there, start seeing houses that you can't afford. And plus, the majority of the time, agents probably won't even show you houses until you have that pre-approval letter. In my experience, typically there's 3 scenarios that happens if you want to go and see houses before actually getting approved. First off, you start seeing houses and you end up not being able to afford that price range. You actually are below it, and now you are accustomed to seeing houses in a higher price point that are bigger, better finishes, and you are disappointed in everything on the market that is in your actual price range. Not to mention, all the time that you put in and your agent put in is now wasted. The second scenario is by the time you get all your documentation into the lender and they give you a pre-approval, there's multiple offers on the property that you're interested in. So now you get into a bidding war and you may have to pay way over asking price. And lastly, you find the home that you want, you give all your documentation to your lender, they give you the pre-approval and the monthly payment that is estimated with that property's purchase price, and it is too high and you don't feel comfortable purchasing it and having that kind of monthly payment. So that's why when you first get the urge to start looking for houses and wanting to purchase, get pre-approved. So before you go out there, you know exactly what you can afford, what you feel comfortable paying. So the second mistake is not saving enough for home ownership. If you are new to purchasing a house or you've only done it once or twice, you may not be aware of the costs associated with home ownership. When you go and purchase a home, not only will you have to put down a down payment, you also have to put down closing costs, costs associated with your inspections during the due diligence stage, and you're going to have reserves of at least 3 to 6 months so that after purchasing the house, you have a little nest egg to sit on. And by the way, that's lender required. And let me tell you something, if that hot water heater goes up or you have a leak in your roof, that is on you. You're going to have to pay for that. So make sure to put a lot of reserves aside for your home ownership. Now, the third mistake is being emotional during the home inspection period. So when you purchase a house, you're gonna want a property inspection. Basically, a home inspector will go through the property and inspect everything from the roof to the foundation, the electrical, absolutely everything, so they can tell you what's wrong with the property and what needs upgraded to meet standard code. I personally highly suggest this to absolutely everyone. You want to know exactly what you're getting into and you don't want any surprises. With that being said, when you first go under contract, you have a period in which you can do home inspections. Now, when your emotions are really high of getting finally under contract on this house and you are so excited for it and you think it's going to be your dream home, but then you find some things wrong in the property inspection, don't get caught up in your emotions and not ask them to fix the defects in the home. Most people don't know, but if you ask them to fix things in the house, you have to provide the home inspection report. If you provide that to a seller, if they back out of the contract for any reason, then they have to disclose those material defects in the house to any new buyer that comes their way. So it is in their best interest to work with you to find a scenario to which it works best for both of you and probably just get it fixed. Because regardless, if they back out, they will have to disclose that to any new buyer. So although there are a lot of emotions in the home buying process, you do not want to give up your ground so that you have more headaches when you purchase the property. Moving on to the 4th biggest mistake that homebuyers make, which is the timeline it takes to actually purchase a house. Now, I would say that this is the most overlooked mistake that homebuyers can make. Whenever you go online and you watch the HGTV shows, it sees that, oh, they go out there, they see it, they put an offer, they close on it, and it looks extremely fast when that's not actually reality. When you first decide that you're actually going to purchase a house, the first week is probably going to be set for getting pre-approved. You're going to be collecting all your documentation and getting that over to the lender, and then they're going to be approving you. So that takes about a week. Now, on average, it takes about 2 months for you to actually find a house. Now, obviously, you can find it a lot sooner, but the chances of it are very slim. And a lot of times when you find a house, then you have multiple offers and you may miss out and you have to go to another home. So roughly about 2 months for actually finding the house and getting it under contract. Now, once you're under contract, most people don't actually know that it takes about 35 to 60 days to go to settlement. And that's because you want to make sure you get through your home inspection contingencies. You want to make sure that the appraisal gets out there and gets finished before the lender has to do a lot of processing on their end. And you want to make sure the title company is doing their title search. So depending on which loan program and what financial institution you used to purchase this property, it's going to be about 35 to 60 days. So all in all, when you first start to actually closing on the home, it's going to be roughly 4.5 months. Now, like I said, that's on average. Some people it takes a lot longer. Some people it takes a lot sooner. It depends on when you actually find that house. But I wanted to be realistic and give you a clear mind of what actually happens instead of watching these HGTV shows that show that you just go out there, offer, and get the property under contract within a couple weeks. Now, the fifth mistake and probably the biggest mistake that home buyers make is becoming house poor. And they do that by buying a home that they can't actually afford. Now you may be asking yourself, wait, how can they purchase a house that they can't afford if a lender approved them, ran all their financials and said, yes, you can afford this type of house? Well, it actually happens more times than you think. When a lender approves you for a house, they will give you typically the max amount that you can purchase. They'll give you the max purchase price with your down payment, and they'll give you the max monthly payment that you can afford. So let's say someone that makes gross $6,000 a month is able to afford a $3,000 monthly mortgage on a property. Yes, on paper, that looks like every month they will be able to keep $3,000, but that's not the case. Gross is untaxed. So now you're actually only looking at $1,500 that you get to keep after paying that $3,000 monthly mortgage. But don't forget, you have a car payment, you have to support your family, you have to pay the electricity, maybe even gas, maybe water and sewer. Not only that, but you have to have money just for your personal to be able to go out and do things for your groceries. And most importantly, you have to make sure that you have reserves set aside so if something happens to your house, you can fix it. Now that's just an example, but it's an example to show you that you do not have to purchase a house that you get pre-approved for. You can purchase a house less than that, and I recommend it because you do not want to become house poor. So make sure to run your numbers, look at your financials, and do not become house poor. I promise you it's not worth it to have a house with all the bells and whistles if you cannot enjoy your quality of life. If you love this video, I know you're also going to love this video, which is my opinion on purchasing your first or next property to build massive wealth. So check it out.